everyone who's new, Trader Connect, this webinar is just for discussing trade ideas. So if you have any specific stocks you would like to have a look at, just put it in the chat or in the Q&A, wherever you would like. We can have a look. We'll do some technical analysis on that stock. And then, yeah, we can share some ideas. That's the idea of this webinar. It's just for me to give you some input along with your own analysis and so on. Okay, but yeah, online trading, what's online trading? We give you the platform, you manage the account yourself. I just said we have different platforms we are using. So Velocity Trade is one we'll have a look at today. Saxo is another platform we'll have a look at today. But we also use Swiss Quote, Momentum. We have different kinds of platforms dependent on your needs. The online trading platform, we just give you that platform. You log in, you buy and sell your shares yourself. Private broking. Private broking it's very similar to online trading. You still manage the account yourself, but you would like some advice from one of our brokers. You're looking at a stock, you're saying, guys, I'm looking at buying this stock. I want to invest in this stock. Can you give me an opinion? Or I have this stock in my portfolio. I want to sell it. Do you guys agree? Can you give me an opinion? Managed portfolios. This is more the discretionary stuff where you just give us the fund and it's like, okay, guys, I don't have the time to look at the markets. I don't have the time to manage this account. Here are some funds, just manage it for me. Structured products, we actually have one available now. It's based on an ESG index, but basically with a structured product, it's kind of like, it's usually based on some kind of index, but they tell you exactly what kind of return you can expect. For instance, on this one, they tell you, okay, we will give you 4 times whatever the market is. It's a structured product from Sanlam. Based on an ESG one, on average, the index has been doing about 5% per annum. So Sanlam is saying, look, invest in the structured product. We will give you 4 times the return over 5 years. So if this index sticks to its average return of 5% per year or 25% over 5 years, Sanlam will give you 100% return. While at the same time, they're also giving you 100% capital protection. So if this index falls in the next 5 years, Sanlam will give you 100% of your investment back. That's usually how structured products work. Offshore transfers, you have some money, you want to send it out of South Africa, we can help you with that. Wealth management, RAs, life insurance, living annuities, those kind of things. Tax-free savings account, I'm sure all of you know what a tax-free savings account is. Every financial year, so from March until February, you can put 36,000 Rand into a tax-free savings account. You can invest it in ETFs, and then whatever growth you get on that, tax-free. So it's a very, very powerful investment tool. I mean, you can imagine if you start putting 36,000 every year and you leave it for 20, 30 years, you can get quite a lot of growth in that. When you sell it, all the profits are yours. You don't have to pay any capital gains tax on that growth. Okay. Then, very important, I mentioned in the beginning, this is for me to give you some of my opinions on your stock picks, the type of things you want to have a look at. But these are by no means a recommendation. I'm by no means telling you, okay, yeah, this looks like a buy, so you should go out and buy this, or this looks like a sell, you should sell, you should go short this. There are only ideas. Please trade using your own discretion. Take my opinion, go do your own analysis. Maybe listen to another guy, put it all together and decide, okay, yes, I want to go long here, go short here, or whatever. Okay, let's analyze your trades. Let me just pull up. First one we'll be looking at, Velocity Trader. So this is one platform we use. This is especially very popular with the guys who want to trade short-term. CFD trading, it's Velocity Trader has local equities, local CFDs, Forex, commodities, offshore CFDs. And if you put at least 100,000 Rand in the account, they'll even give you access to offshore equities. But okay, so I'll start us off with USD ZAR, was very popular. One thing we can already see from the beginning. So this little area here, 15 Rand to 15.20. This is clearly a very important area for the USD ZAR. We are now at the bottom of that range. So this is used to be resistance, then it became support. So it is at support now. So if you are bearish on the Rand, you're bullish on the dollar, bearish on the Rand. Because remember, with Forex, there are always two sides to the trade. When you go short the Rand, you're basically going long the dollar. And if you're going short the dollar, you're going long the Rand. So in this instance, if you're bearish on the Rand, you will be buying USD ZAR contracts because you're expecting them to strengthen. So let's say if you're bullish on the USD ZAR pair, okay? I'm not talking about any specific currency. I'm talking about the pair, the USD ZAR. Because if you're bullish, naturally, if it's going up, you're bullish. If it's going down, you're bearish. So right now, if you're bullish, this could be a very good time to open a long contract on the USD ZAR. Just because it is right at support and it's very close to the bottom at 15 Rand 5 cents. And it's only 5 cents away from the very bottom of this area of support and resistance. Would be a little bit careful though, because I mean, we all know what's been going on between Russia and Ukraine on the border. Russia said, okay, we're pulling back some of our troops, so it's de-escalating the situation. And that is making markets a little more risk on. And if you're risk on, the Rand tends to do very well. Risk off, when people are more defensive, well, the dollar tends to do a bit better. Now, I have seen some reports where some people in America and NATO saying like Russia is lying, they're not really pulling troops back, we're not believing them. So the situation will escalate very quickly again. Another thing you have to keep an eye on, commodity prices, naturally. In South Africa, we're a commodities-based economy. Our economy is very tightly linked to gold miners, and platinum miners, and iron ore miners, and so on. So if commodity prices, like yesterday or 2 days ago, China did what they did last year. China doesn't like it when commodity prices get too high. So China said, we will actively be fighting high commodity prices. That was not good for iron ore prices. They were specifically talking about iron ore. That was not good for iron ore prices. Iron ore prices fell, and initially the Rand weakened. You can see it went as high as 15.24, where it opened the day at like 15.10. Well, we could see here, what was the opening price? 15.07, that was the opening price, and it went as high as 15.25, just because there was this shock reaction to the commodities markets when China said that, the Rand weakened. Luckily, it has strengthened again, but you need to factor out. When I say open a long position, well, I'm not recommending it. If you want to open a long position, you need to factor this in. You need to keep an eye on the commodity prices. Okay, but yeah, okay, that's support. Let's put another little indicator in there. So what are we seeing, MACD? Okay, so the MACD is bearish to a degree. So there was a bearish trend. So if you're not sure what the MACD is a trend indicator. So that's what the MACD does. It indicates the trend. If it's trending down, it's telling you basically we're in a bearish trend. And it was correct. I mean, it was trending down and the Rand was strengthening. USD was weakening. The USD ZAR was in a downward trend. But what do we see there? If we zoom in a little bit, if you come to this webinar, we've spoken about these divergences many, many times. What do we see there? Okay, so it's been flat there. You can very clearly see it's been flat. Yes, it's gone slightly lower, but mostly it's been flat. Yet, it's starting to trend upwards on the MACD. Okay, so that is what's called a bullish divergence. The stock is either trending down or it's flat, but yet the MACD is going up. So that is a bullish divergence, and that's another signal you can consider. Oh, okay, maybe I should be opening a long position on the USD ZAR because it is close to support. First thing. Second thing, there is a bullish divergence. So that's another nice little signal there that, oh, okay, wait, maybe I can open, this is a good spot. This is a good time to open a long position on USD ZAR. Okay, any questions on USD ZAR? Okay, so then there's quite a few stocks guys have been putting on here. Okay, so the first one is Sibanye. Okay, Sibanye. So there was this big jump, and as you can see, Sibanye as a commodities company. That's because China came out with that news. Oh, we're going to be fighting commodity prices, and then Sibanye proceeded to tank. That's recovered at least a bit today. What I do like initially, like was this jump, but there is again. Let's look support resistance. A lot of people like to draw a line for support and resistance. I prefer to draw like squares because they tend to be more like areas than very specific numbers. Right now, it seems like on Sibanye, we can go back even further to here. This little area of support and resistance for Sibanye between 57.50 and 60. So that was good 2 days ago. It broke above that. That was a good sign. But then those fundamental news came out about China, the commodity prices, it dropped right back down, went below it, and now it's back. So now it's kind of a wait and see. What are we looking at? It's back here. So is it going to break or is it going to fall below? Immediately on the MACD, what do we see again? So this time I'll put a little arrow. It's been mostly flat. But on the MACD, what do we see? There is a bit of a bearish divergence on Sibanye. So that is a bearish sign. That is telling us, oh, maybe don't go wrong. It's more likely to break back below than break above. We can put another, let's put some, our usual Ichimoku. Okay, now the Ichimoku is telling us a very, very different story. For those of you who are not aware how this indicator works, basically it has multiple moving parts. So first is your short-term moving average, medium moving average. And this is what's known as the cloud. This is your leading indicator. And then this is your lagging indicator. So basically the lagging indicator is just whatever price is now. You can see it's at the exact same level as the current price. But it just takes the current price and moves it back 26 days. Or if you're looking at an hourly chart, 26 hours, whatever the time frame is on your chart. And basically the lagging indicator is if price is above where it was 26 days ago, that's a bullish signal. Okay. If it's below, that's a bearish signal. But at the moment it's above, so that's a bullish signal. Next, your leading indicator, if it is green, it's predicting that the price will continue to strengthen. So that's also bullish. The next, if your short-term moving average is above your medium-term moving average, that's bullish. So at the moment, there are 3 bullish signals on this indicator. So this indicator, where the MACD was telling us, oh, okay, there's a bit of a divergence. But remember, I've said this many, many times. A divergence is not 100%. Just because there's a divergence on an indicator, it does not mean that it will happen. It tends to be very good, but it's not always 100%. So don't just think, oh, just because there's a bearish divergence on the MACD, it will now fall. So don't think, oh, well, okay, this indicator is wrong just because there's a bearish divergence. Take all these things into account. So at the moment, this is looking very bullish on Ichimoku. So let's see. Okay, so the guy, the individual asked, can this get to 65? So where is the next area of support resistance? Looks to be at about, if I look there, so there, to about there. So that's the next area for it to break. So yeah, can it go to 65? Definitely. I might struggle to get above 64, but probably 65. I can definitely see it getting to 65 because this is looking very bullish on the Ichimoku indicator at the moment. Okay, then discovery. Oh, sorry, before we move on, any questions on Sibanye? Okay, no, we're good on Sibanye. But what about potential strike at Sibanye? Will this not make it bearish? Well, yes, that is, the strike will always affect a stock's performance. But this is just based on technical analysis. So I'm not taking into account any strikes or any other fundamental reasons. But if you want to look at fundamentals, of course, strike at the company will always affect a stock's price. And again, like I said with Iran, same thing. If China continues pressure on commodity prices, not just Iran, commodity companies will feel it. And it's going to that. So you need to keep this in the back of your mind. That's from a fundamental point of view. From a technical point of view, this is what I'm saying. It's looking very bullish. It is right at resistance, managed to break through it. And it looks like they had good momentum and then that news broke, but now it's back again. So it can go either way. Based on this indicator, it's looking very bullish. Okay, but that's Sibanye. Okay, so the next one they want to look at is discovery. I mean, the first thing, again, this is looking very bullish. And it looks like Discovery has some very good momentum at the moment. So that's one thing to look at. But I mean, if we go back 26 days, what do we see? It is above, bullish. The cloud is green and rising. It's predicting more bullishness. The short-term moving average is above the medium-term moving average. That's bullish. So at least on this indicator, things are looking very bullish. Let's look on MACD. Do we see any divergences? No. Look, no divergence on the MACD either. As it's going up, the MACD is continuing to look up. It's looking very bullish on MACD. So Discovery is definitely looking good. Let's just zoom out a bit. See. Okay, so yeah, we have to zoom out quite a bit. But this is where we're seeing resistance. Okay, so it is reaching resistance though. So let's see, between there, about there, to there. Yep. Okay, so if we're looking at that, then Discovery is right at resistance. It's just reached resistance today, which is at about 170 to, no, I'm lying, sorry, 168 to 170. So this could be where Discovery begins to lose its momentum. Because look exactly what happened. It reached resistance, that was the high for today, and then it started coming back down again. So yes, Discovery had momentum, but now it's hitting a bit of a brick wall. I mean, naturally, nothing goes up in a straight line. Eventually, it runs out of steam. Eventually, people who are bullish on stock, they start exiting their position, they start taking their profits, and the stock begins to lose momentum, and then you can see it get a correction. This is what might be happening to Discovery at the moment. People might have been keeping their eye on the stock. They might have entered here at the bottom. They see, okay, Discovery is getting a bit expensive. It's getting to resistance levels. I'm going to start exiting my position. I'm going to start taking profit. And this could be a problem for Discovery. For me right now, would I go long? Would I go short? It's hard to say. I mean, it's kind of a wait and see situation at the moment on Discovery. How is it going to handle hitting resistance? If it breaks above it and we give it a nice big candle, you can open a long position. If we see a big red candle, you see, okay, it's probably resistance is holding, people are exiting positions. It might be a good time to look at opening a short position, even though at the moment we're only getting bullish signals. It's literally a wait and see to see, okay, what are we going to see on what's going to happen on Discovery. Okay, any questions on Discovery? Okay, the next on the list is Naspers. And by the way, we're not just going to look at South African stocks. So if there's any international stocks you want to have a look at, just put it on the list. Once we're done here, we're going to move to the DMA platform, just so you can have a look there. And when we have that platform, then we'll begin to look at international stocks. So if there are any international stocks you want to have a look at, just put it on the list. Okay, Naspers. Well, Naspers has not been having a good last year or even longer, but yeah, looks to continue to be weakening. Okay, it is at least, looks like it's at support. This time we're not really looking at an area of support. It seems to be a very good line. So they're at, let's say, 2,900, between 2,290, 2,300. Naspers is at that support, although it seems to be breaking below it. It is looking a bit bearish. Same thing. If we look at this line, it is below where price was 26 days. That's bearish. The cloud, bearish. It's not a very thick cloud, so that's at least helping, but it is red nevertheless, and it's predicting bearishness going forward. Short-term moving average below medium-term moving average. That's bearish. The MACD, it's trending down and it is below zero. That's bearish. One good thing that is, no, also not really. I wanted to say there might be a bit of a bullish divergence, but I mean, it's it's so small, this bearish divergence. I mean, it's barely below where it was then, and it's pretty much at the same level. So would I call that a bullish divergence? I mean, probably not. So Naspers is looking very bearish at the moment. But this area seems to hold. It's like Naspers is not really struggling to break below this. So this seems to be a bit of an area of consolidation. But yeah, it seems to be stuck in the range. So let's put resistance. There we'll put resistance is about here. So this is since last year, August. Naspers has been stuck in this range. It's now at the bottom of this range. So actually, if you take that, oh, sorry about that. Okay, so this, even though things are looking very bearish on the signals, if Naspers sticks to this range, this could possibly be a good time to open a long position on Naspers actually. So you open long position, you aim to take profit at, you can either to go bottom of this range, So which is about 2,640. Or you can aim to go take profit at 2,700. I mean, that's a good 400 Rand move right there, if it sticks to this range. Stop loss, where would I put our stop loss? I mean, I would probably put it pretty tight. If you consider that Naspers has been sticking to this range, if it goes way below it, then it probably means no. It's not going back up there. It's continuing to fall. So where would I put my stop loss? I'll probably put my stop loss at like 2,200. So 80 Rand stop loss. And then take profit, 2,640 to 2,700. So that's sorry, that's not a 400 Rand move, I'm not. If you go to 2,700, that's a 420 Rand move. If you go to 2,640, then you're looking more at the 360 Rand move. And your risk is only 80 Rand. So, I mean, the risk reward ratio there is not very bad. Possibly lose 80 Rand, but possibly make 300 plus Rand. It's not a bad move. So actually, if you disregard the other signals, so you disregard the MACD, you disregard this Ichimoku, and you just look, okay, Naspers is in this range, then I would probably say it looks like a long trade for me. But if you want to take into account these technical indicators, I would say Naspers is not looking very good at the moment. It's looking like more of a sell. But that's the thing about technical analysis. No one indicator is absolute. No one indicator is perfect. You kind of have to take it all into account and say, okay, y'all, see this one, I'm going to disregard this. I'm going to look at this, because sometimes they're right, sometimes they're wrong. Like I spoke about these divergences. These divergences tend to be good, but they're not always 100% correct. So you have to take all of this into account, and you can look at this and say, no, I can see that Naspers has been sticking to this range. So I'm going to disregard the indicators here, and I'm going to open a long position. Or you can say, no, I don't know. There's just too many bearish signals on all these indicators. I don't think this range is going to hold. I think Naspers is going to continue to fall. You're going to open a short position. So it's entirely up to you how you want to analyze the signals you're getting from your technical analysis. Okay. So sorry, someone has quite a few they want to look at. Yeah, Amazon. So someone gave a lot of stock. I'm assuming they're offshore stocks with their sticker codes. I mean, Amazon I know is offshore, so we'll leave that for later. EOH, let's have a look. EOH, I think it's not looking the best for EOH. Again, they were implicated in the state capture report. The city of Cape Town, they came out and they said, it's not just EOH, there's a bunch of companies. Oh, all those companies implicated in the state capture report, we are going to cancel the contracts with it. EOH is one of those companies. So naturally, that has not been very good for EOH. So what can we see there? First of all, I mean, there were kind of support and resistance there. Actually, we're going back further. It's right at resistance at the moment. So, I mean, what this could possibly be is what is known as a dead cat bounce. So it's kind of when a stock falls, but then it recovers, giving people hope, oh, it's recovering, but then it just falls back down again. That is what's known as a dead cat bounce. It's kind of like what I call a correction, but just in reverse. So EOH is looking very, very bearish at the moment. I mean, cloud is red, bearish. Short-term moving average below, medium-term moving average, bearish. Big red candle broke below support, bearish. The lagging indicator below where it was before, bearish. So this actually looks like a very good spot to open. If you missed a short trade before, let's say here, this looks like a very good place to open another short trade, going by the technical analysis here. It's right at resistance, struggling to break. 1, 2, 3 days now. It's trying to break above it. This resistance is holding, getting bearish signals. The MACD is bearish. Big red candles, starting momentum for the drop. Bad fundamental news coming out on EOH. So this is possibly looking like a good short. If you want to know, by the way, if you can open a short position on Velocity Trader, just click on this little CFD button. Then you say there, allow short positions. No. So unfortunately, at the moment, Velocity Trader doesn't allow short positions to open up on this system. Maybe on the other one, DMA Traders, other platform, maybe they will allow it. But yeah, at the moment, would I be buying it? No, I'll probably rather be looking at opening short positions. Okay, that's EOH. Any questions on EOH before we move on? Okay, ACL, ArcelorMittal, someone wants to have a look at. Okay, so one thing to note now here, these borders, these cloud borders, they tend to have a way of acting as support and resistance as well. So what you might see here with ACL is that as it gets to the border, it might even find support and then start going back up again. I mean, at least this cloud, this is a nice big green cloud. So this is predicting a very bullish future for ACL at the moment. Has to be noted though. Okay, so see, this was a good example of a divergence. So there you can see it was pretty flat, even though over the same period it was going up. So that was a nice big, let me just see if I can make it more visible, thick. So that is a very good example of a bearish divergence. It was telling us, hey, watch out. This stock is going up, but the MACD was not going up with it. That was a nice big bearish divergence. And look what proceeded to happen. The stock proceeded to fall. So that's a good example of how these divergences can be very good indicators. Again, they're not 100% correct all of the time, but they can be very, very good at predicting a change in trend. Okay, but now we're getting some mixed signals here. So the cloud is big, it's predicting a bullish future for ArcelorMittal. But look, the short-term moving average has moved below the medium-term moving average. The lagging indicator has moved below where price was 26 days ago. So it has gone pretty bearish on the stock. Add the fact, again, the news, commodity prices. China wants to fight it. They don't like it. Fundamentally, that is bearish. So right now, at the moment, would I go long or short on ACL? I mean, if you put a gun to me, I would probably say I'd rather go short on the stock instead of long. Although one bullish signal for it, at the very least, apart from a cloud, is that it is right at support. So will this support hold? Wait and see. But at the moment, it's looking more bearish than bullish. Okay, then final South African stock we're going to have a look at. Nampak. Okay, so Nampak, I mean, okay, the cloud is very red at the moment. That's bearish. But if you look at the stock, it doesn't look like it really has a lot of momentum at the moment. It's just stuck in this range. So let's say 3.60 at the bottom. And then at the top, 4.20. Yes, it has broken above it, false breakouts. Most of the time, actually, seems, well, let's rather make it an area than a line. So what's that? 4 Rand to 4 Rand 20. That's the area of resistance. Right now, NAMPAC, and what do we see? It's right at the top of this range. So would I go long on it? Probably not. I mean, even the MACD is telling us there's no trend here. There's no trend on NAMPAC at the moment. It's not bullish, it's not bearish. It's just stuck in this range. And that's usually another way you can identify it is when the lagging indicator, when it's not above or below, it starts to move in between price. Again, that's another signal. There's no trend here. And NAMPAC right now at this moment is right at the top of this range. So again, what would I do here? I'd probably, I mean, if you want to be risky, you can say, okay, I'm going short. If you want to be less risky, you can wait for a red candle and then say go short. Aim to take profit at 3 Rand 60. Where would I put my stop loss? Well, as we can see, it can go high. So put your stop loss at 4 Rand 50. So 30 cents away, take profit 50 cents away. Okay, that's NAMPAC. Let's go to the offshore one now. Okay, so we use this platform locally as well, but if you open an offshore account with Rand Swiss, this is probably the platform you'll be using. So Saxo Bank is a Danish bank, but their South African office, they operate under DMA. So that's why it's saying DMA at the bottom and not Saxo, but it is Saxo Bank. And this is the platform 90% of our clients use offshore. Okay, so there was quite a few ones there. I'm assuming this is what we're talking about, Autozone. Okay, let's have a look at Autozone. Okay, so what can you see? Autozone had some good momentum, but now not so much anymore. It has stopped the momentum. It has lost momentum. At least what we can see though is that it is right at support now. What used to be resistance. It's very thin, that line. Okay, so there you can see, there's the line. It has held. So it was resistance before, broke out, found support, went up, now back at support. If you're looking to buy, might be a good time. Let's put on the MACD. What's the MACD telling us? Okay, the MACD, again, look what happened. Another example of divergence. So as you can see, it was trending up, up, up all this time from October last year. But what was happening on the MACD? Not much. It was just pretty much staying flat. Another bearish divergence. Another good example how a bearish divergence can be a very good indicator of like, hey, be careful, don't go long. Okay, because it's exactly what happened. It went higher, it went higher, it went higher, it went higher, but yet same level, little bit higher, little bit higher. But at the it was just, it's a bearish divergence. It was warning you, and that's exactly what ended up happening in the end. It started falling, it started trending down. But now we're kind of starting to see the opposite happen. Because these two levels are pretty much at the same level, but yet, sorry, that's the wrong one. What are we seeing? This time we're seeing a bullish divergence. So that's a good sign. Right at support, you are getting your bullish divergence. So it's telling you, hey, maybe this is not such a bad time to go long. If you want to do a short-term trade, what do? Open your long trade, aim to take profit. So it's now at 1,933. Aim to take profit at 2,100. So what's that? That's about $800. No, sorry, I'm not $800. $170-ish move. Where do you put your stop loss? I mean, I'll probably put it just a little bit below. So 875-ish. So $60 away. 60, if you want, you can go 870, that's $65. That's where you put your stop loss, take profit 2,100, $170 move for a possible $60 loss. That's not too bad. Okay, then this one. Next era energy. Okay, well, they don't seem to be doing all that well. They're quite a fall, but there's your doji. So doji, for those who don't know, is that little, it's a candle with a tiny body, long tail. And that's usually also a very good signal that the trend is changing. And that might be exactly what has happened on next era energy here. The trend might just have changed. It bottomed out and it's now starting to recover. So there we can clearly see, if you draw a line there, so it's so thin again. Let me just make it more visible. Okay, resistance, resistance, resistance. It got to support, but it was a false break below. Got back. So this support now seems to be holding. So looking at this indicator, it looks as if the downtrend, the bearish trend might have bottomed out. Might be a good time to start picking up stock on next era energy at this price. The MACD has turned up. The MACD has turned bullish. It's starting to say, oh, wait, this was a bearish trend, but now this is a bullish trend. You can put on another indicator. Naturally, I'm not too surprised to see that it is bearish. I mean, this is a pretty sharp fall. So it is looking very bearish, but I mean, when the stock falls this much, I mean, I won't be surprised that everything is bearish. It will take some time to normalize. But at the moment, for what it's worth, Ichimoku is very bearish on next era energy. But again, it comes to that, like we spoke about earlier about Naspers being in this range. And even though all these indicators were bearish, you could see that Naspers stick to this range. So you can say, I'm going to ignore the indicators. I'm going to ignore all these bearish signals. So far, Naspers has stuck to this range. I'm going long, even though all the indicators are bearish. It's kind of the same thing you can do here. You can say, look, there's support. It got to support. There is a nice little signal saying change in trend. This was clearly a false break below. Now the support is holding. I'm going to ignore this Ichimoku indicator. This looks like this could be a good time to open a long position. It's kind of, you have to kind of have your own judgment on these kind of things. Okay. Next one. Bank of America. Yeah, so I mean, immediately we can see something here, a nice massive divergence. There's one going all the way there. And then there's another one going here. There's kind of two bearish divergences here. First one is here, clearly created a new high, but went way lower. This one, again, way lower than this one, even though it's higher high. And then you have these, and it's creating high, and this is also known as a double top pattern. So this is a trend reversal pattern. It's when it creates two highs at the same level, it's not able to break it. How do you usually play a double top? I mean, it depends on how risky you want to be. You can either open your short position at the top and play it all the way down to either to where support is at this moment. It is here. Oh, sorry, I'll move this line now. But this is a good example where I told you earlier. these lines, which they draw ahead of time, a lot of time they act as support and resistance. And then you can see this line held as support, support, support. So just something to note there. But okay, there's your support. So what you can do in this double top, if you want to open the top, is open your short position, but then you kind of have to do it here. It's already dropped quite a bit. Take your profit here. Usually, however, how these double tops happen is you wait for it to play out. So you wait for it to come all the way down, break the support, as that's your confirmation. That's when you say, okay, I'm going short, and that's when you open it short. Usually what they say is you aim to go 1 for 1. So what's this range? 43.50, 50, so it's $6.50. So you put your take profit $6.50 away, which is about $37, which is about here somewhere, which kind of makes sense because there is the next support at 37.50. So 50 cents below that is kind of where you can aim to take profit. But I mean, you can do it earlier because I mean, as I'm saying, there's your divergence. There's a big bearish divergence in this. You're going to say, you know what? I'm getting a big bearish divergence. I'm opening my short trade right now. And that's what you can do on Bank of America. So, but it's looking as a short trade at the moment. It's not looking as a long. Okay, then final one I'm going to have a look at today, Amazon. Okay, Amazon not been doing all that well. It's not to be expected. I mean, a lot of the tech stocks have not been doing well. Amazon earnings wasn't too bad. Most tech stocks have been falling because they've just been having bad earnings. Amazon's earnings weren't all that horrible. But what you have to take into account with these tech stocks is high inflation and interest rate hikes. So a lot of these tech stocks are known as growth stocks. And what growth stocks are is you're paying a price for a share now with the expectation that the future earnings are going to be very big. But if inflation is high, that suddenly diminishes the value of those of the future earnings. So these growth stocks, you begin to see their share prices falling. That's why a lot of people in the current high inflation environment are considering, or they already have, moving from growth to value, because value is all about getting the money now, whereas growth is about getting the earnings in the future. High inflation, bad for future earnings. You'd rather take the money now before it gets diminished by inflation. So that's been affecting tech stocks pretty badly for a while now. But yeah, okay, let's have a look. Amazon, what are we seeing? I mean, first thing, red cloud, that is bearish. Lagging indicator below where price was 26 days ago, bearish. Short-term and medium-term moving average, pretty much same level. MACD, bullish, it's trending up. So it's kind of, I'm getting a lot of mixed signals here on Amazon. It's, I don't know, go long, go short. It's hard to say at the moment. I can't really say. What we do notice though is if we draw a horizontal line, there it is. You can see that this little area at 3,250 support for a bit, broke down. And what happened the moment Amazon got there? Resistance. It struggled. Okay, there it is. Struggled a bit. But okay, yeah, so Amazon, it's a wait and see. I can't tell you like, okay, this looks like long or this looks like a short. It's a wait and see situation. But yeah, okay. Thank you for attending the webinar today. As I said, we tend to do them every month. There might be a month here or there where we skip them for some reason, but 90% of the time we do them every month. We will have one again in March.